Hello everyone, welcome back to the Wealth Saarthi and I am Tulshi. Today we are going to discuss about Phoenix Mills Limited. What is the great opportunity I see in this company? What are the business analysis saying? What are the fundamentals saying? What do we see in technical chart pattern? That is all we are going to discuss in this video. So if you are new to my channel name is the Wealth Saarthi, where I discuss ideas about investments, insurance, mutual fund, stocks, and then the business and company analysis. And the way I do my investment is that I analyze any company on three parameters, which is business, fundamental, and technicals, and then I make my decision whether to invest money or not. But however, it is just ideas. It is not any buy or sell recommendation. So I will trade as per my learning. You will trade as per your learning. So let's get started. So the company what we are going to talk about today, it is the Phoenix Mills Limited. So this particular organization, they are into the buildings of building the retails, the commercials, the hospitality, and residence. So basically, it's you can say it's a real estate the service company, and they develop retails, they develop commercial projects, they develop the hotels and the residential projects as well. So in retail, if we see here that they have so many ongoing running mall. So if we see under the retails that they already have quite a few running mall like Phoenix Palladium Mumbai with 245 stores, Market City Pune 352, Market City Mumbai 311, Market City Bangalore 296, then Chennai. So this is how I generally find information. You don't really have to go anywhere else. You can just simply visit the company website and then find all these relevant information. So that will just give us the glimpse of what does company do. Like here, these are the all upcoming plants: Citadel, Indore, Ahmedabad, Bangalore, one more, Pune, Kolkata. So why I'm very bullish on this particular sector, because this is one particular sector which was under hammer and the worst hit sector during the COVID pandemic 2 years ago. The hospitality, the retails, cinemas, malls, and etc. And now since the situation have become far better, they are definitely going to do much better in upcoming days. And in fact, the hotels, if you see in last quarter, they are all posting the stunning results because the occupancy have come back, the people have started traveling, and they are difficult to find the hotel rooms these days. And then if we go to the hospitality in the Phoenix Mall, so they operate the most luxurious hotel in the country. So they own the St. Regis Mumbai, which is operate and run by the Marriott group of company. And then their average occupancy is 78% occupancy with 295 keys and with 10 F&B outlets. And then another hotel they own is a Courtyard by Marriott in Agra with 67% occupancy and 193 keys and 4 F&B outlets. And here if we see in the residentials, let's see what do they have in residential. So in residential, the one Bangalore West and Kesaku Bangalore. So these are basically the glimpse of what does company do. And if we now see the fundamentals of the company, it's a 19,396 crore market cap company, trading at currently price of 1,086, with ROCE and ROE not looking that great, because as I said earlier, this was the worst hit business during the COVID pandemic. But definitely it will grow. But here if we see the profit growth, the numbers have already started turning the tables. Profit growth 435%, previous 12 month 166 crore, quarterly sales variance 29.5%, return over 1 year 51.6%. So the things have started looking very good in this company. Now we'll just see the quickly few key points. So the segment wise revenue, 80% from the property and related services, 18% from the hospitality services. The commercial portfolio, the co-commercial centers in Mumbai, Pune with a rent generating leasable area of 1.31 million square feet. Residential portfolio 4.44 million square feet. And if we see the hospitality portfolio, like I said, the St. Regis, the most top-notch luxury product under Marriott portfolio, 395 rooms and ARR of 12,241. I'll just in a brief I'll just show you that what does the revenue stand for the company in the future. And the new launch, upcoming launch, then this is the under development. So there is quite a lot happening in this particular company, and there is a definitely good growth ahead. Now if we just review the quarterly results, so let's start reviewing results from here. So June 2020, when we were first hit by COVID, it was only 135 crore. But after that, as the lockdown lifted and then situation started improving slowly, gradually, the revenue were increasing up until this June 2021, which was 204 crore because of the second wave. But then after, it is again picked up 364 crore in quarter ended September and 425 crore in quarter ended December 21, which is third highest since we have the data available, because in the March it was 723 crore, and then second highest was here in December 2019, which was 512 crore. So what I am foreseeing now, because the March ending quarterly results are yet to be announced, I am expecting definitely more than 500 plus crore. We'll just have to watch and wait, but that is what my expectation is. And interesting thing here to be noticed is that quarter ended March 2022, promoters have increased their stake from 45.43 previous quarter to 47.33 this quarter. So that means that if promoters are increasing their stake, that means there is definitely something great happening in the company. So I just want to give you a little glimpse of how does I want to show you from here. Just a second. So here I will just give you a little preview of that. Even from analyzing only one particular business of the company, we can give little bit of estimate of how much the future revenue we can foresee. So St. Regis Mumbai, it's a 295 rooms inventory with ARR of 12,241, and we just saw here that they have posted that their occupancy is 78% St. Regis at financial year ended 2020. So this is when financial year 2020, during when COVID just started. So this occupancy is definitely not going to be the same. It is definitely going to increase. But however, just for the calculation purpose, let me just open calculator. We will consider the same occupancy of 78%. So 395 rooms, 0.78. So it's a 308 rooms occupied every day into the ARR of 12,241. So that is 37,71,000 into 365. So we are talking about 137 crore, 65 lakh revenue only from the St. Regis Mumbai. This is just to give the glimpse, and that is only the room revenue, because we have considered the ARR and the occupancy. We have not considered the food and beverage revenue and any other ancillary revenue coming from the St. Regis Mumbai. Now just think about it. Courtyard Marriott Agra, and then the other real estate properties, all their malls, because now the footfall in malls have increased. So that means that the other brands which are their tenants who will lease the shops in their mall, they will definitely, all these shops which were shut during the COVID, they will all start to reopen, and the cinemas will increase their occupancy. So overall, in nutshell, I do see a great opportunity in this company. Now let us see what does the technical say, and whatever we have discussed so far in business analysis and in fundamental analysis, whether it is evident on the technical chart pattern or not. So currently I am on a Phoenix Mills chart, and we are on a weekly time frame, because I prefer to start from the larger time frame to the smaller time frame to give a better perspective. Now if I draw a line over here at this level, because this level was their previous high before the COVID, and then recently it has touched the high of 1196, but then it did not give closing at that level. It just touched and it came back, and currently it is trading at 1085 level, which is just a drop above their all-time high closing. But why I am more keen on this level, because this level was the all-time high during just before COVID, and it would have actually made breakout here and gone all-time high, but unfortunately pandemic came and all business shut, and particularly this this company, what we discussed in the business analysis, that why this sector was under the biggest hammer. So therefore the sharp fall came here, and then it made a bottom out here at this level. I'll just draw a line here as well. So here it bottomed out, and after that it is consistently, slowly, gradually moving up, making higher highs and higher low. And in this level on the week ending 20th September, it gave breakout above this level, and it tried to move, but it did not sustain the breakout, and again it started moving down. So what is happening of lately, because ever since we are surrounded by this Russia Ukraine war, rise in the commodity, rise in the crude, and the inflation problems and etc. So what is happening because of this? There are so many breakouts happening. Even if you see Nifty as well, Nifty is a one day gap up, one day gap down, one day gap up, gap down, red green, and it's very confusing market. So very volatile, very extremely volatile. So in this volatile market, the lot of breakouts are failing. But if we apply support and resistance theory here on this particular chart pattern, so here what was the highest level pre-COVID? It was a resistance level, and then it was tested here once, twice, and thrice. Finally it gave breakup, and now this support has become into the resistance. And then if I just point it out here, so here it has given touched once but then did not break level, here touch once but did not break, here one more time, and then here couple of more time. So finally then it has started moving up. So it's a very good chart pattern I see here in this, and then it is definitely in a way of making a new all-time high. Now what would be the target? So the way I calculate target here is that if we consider this with a cup and handle pattern, and this is the depth of the cup, and then I do decide target based on the range calculation method, which comes to about 1333, and which is from current price level 23%. And after that we have to trail and see that how far it goes further. And now if I switch to the daily time frame, and let me just make this little bigger. If I switch this to daily time frame and draw a trend line here from this level, and then connect this 3 point. So when I do the trend line, I always try to do a 3-point touch trend line. So this is 1 point, second point, third point, and the 4th point, it is just crossed above the trend line, but it did not sustain. So what we need to do now is that we have to wait until the closing above this trend line, which will confirm the entry, and then with the initial target of 1338, and after that we can trail our target. So do I have entry in this position in this company right now? Not at this moment, because this is I just screened and analyzed over this weekend, and I'm making this video. But this is definitely is going to be on my radar on Monday, and if I see the closing above trend line, I'm going to take entry. But however, I will trade as per my learning, you will trade as per your learning. This is not a buy or sell recommendation, this is just an educational video. So keep watching, keep learning, and my goal is to share my knowledge so that we can earn and learn together. So that's it from today's video. This is Tulshi signing out until I see you in the next video. Bye bye.